Study the past if you would divine the future. Confucius gave us that quote many, many centuries ago. It has been our motto here at Charting Wealth since our founding. And that is what we do here every day. We study the past. We study and look for trends that are set up on both our weekly and our 2-day chart. And then we look for entry points to jump into those trends to ride them. So regardless of what anyone tells you, that computers control trading, humans are no longer involved, gold is being illegally shorted, whatever you hear across the board, if we can track it over time, we will look to it for potential trades and investments. That is what we do here at Charting Wealth every single day. We want you to join us. We want you to start becoming a virtual trader investor, figure out how these charts work, and start making your virtual fortune. When you get good enough and make up your own mind as to what you want to do with your own money, have at it. But do not become a gambler. And do not think that you're a genius when the market has been going up over months and months and months. And of course, a monkey could throw a dart at a wall when it comes to stocks and watch things go up on these indexes. However, there are areas of concern. We'll talk about those as we jump into the charts. And what are we preparing for? As I told the Patreon supporters in our monthly Q&A today, and if you're not a Patreon supporter, you can sure be one. Follow the link in the notes. I told them we are training for game day. Game day is when there's a systemic market crash. There is one sometime in the future, and we are going to be ready for it. It is going to be an opportunity to not lose everything you own and to be able to make incredible fortunes. So, unlike the folks that are not going to know what's going on, are going to be losing everything in a blind panic, throwing themselves off buildings, we are not going to be in that crowd. Let's jump into the charts right now, see what's going on. We see that the S&P 500 is down a little bit for the day. The Qs was down more, 0.25%. S&P 500 down 0.07. The 20-year bonds down also 0.43%. Gold down 0.25%. Let's start as we always do with the weekly chart. What do we have forming? Well, it's our first solid red candle. It's a red spinning top so far, 3 days into a 5-day candle. Prices, of course, pushed through the weekly trend line. Red spinning top, of course, means indecision, tending down. The smaller that candle is, all the way down to a doji, means more and more indecision. And of course, as we look at our charts, we have not seen a solid red candle since all the way back at the end of this last year. We have had up, sideways for a little while, and then for the last 5 weeks, strong up movement. But we see the first time we have seen the price percent oscillator moving down since, we have to go all the way back to, yes, the end of the year, beginning of this year. Derivative oscillator for the first time in several weeks has lost energy. So again, we're keeping our eye on things. We go from the weekly to the 2-day. Well, of course, we had that crossover back on Friday going down. So we're going into the second candle. It's not drawn yet, just as the first day of this latest candle, but the derivative oscillator's heating up, going down, and the price percent oscillator consistently hockey sticked over, going down quite strongly. One thing we do note, bit of a pullback on the wick. The wick is not as low on this candle, but as we look at this candle, we see it has no upper wick on it at all. So again, a down candle for sure. We'll see once this candle's fully drawn at the close of business on Thursday just what all of it means. We go to the 4-hour chart. What do we see there? Well, it was a down day, but we do see green movement. Again, things perhaps bottoming out. We don't know. But again, not anywhere near reaching the low that it did on the prior candle ending in the afternoon on Tuesday. So again, green candles, maybe things are bottoming out. Maybe the market's just adjusting after that plummet. We'll just wait and see how things sort out. But we do see some definite loss of energy in the S&P 500. Definitely loss of energy there. We go to the Qs. It was down more than the S&P 500. Again, 0.25 versus 1.4. I think I said 0.07, but my charts have adjusted to tell me 0.14 down on the S&P 500. So we look at the Qs, and again, we see a red spinning top similar to the S&P 500. We see, again, pushing through quite clearly the weekly trend line derivative oscillator losing energy for the first time in many weeks. Price percent oscillator also heading down for the first time since the end of last year. We then go to the 2-day chart, and again, we see another down candle, but the wick not as low, but again, no wick on top. Derivative oscillator gaining lots of downward momentum, and again, price percent oscillator hockey sticked over, going down. We look at that 4-hour chart, and again, perhaps the market's just sort of adjusting to all of that lost momentum. We'll see how it digests that and if it keeps moving down. Now, still remember, the weekly chart is still in a confirmed up move, but it has lost a lot of energy. We'll not be calling any huge pullback on anything until and unless that weekly chart crosses over on the S&P 500 or the Nasdaq 100, whichever you are paying attention to. So we're going to go back to our weekly chart, move away from stocks, and take a look at bonds. Now, bonds were trying to pull away, it looked like, from the red signal line, but now with a down day of 0.43%, we do see a green up candle forming, but we're just about laminated on the price percent oscillator. It could end up the week crossing over, going down. Thought that might have happened over the last 3 weeks. Hasn't happened yet. Derivative oscillators gained a little bit of downward momentum, but again, we got a green up candle for the week. We'll see how everything sorts out. We're not in a rush here. We've got the weekly trying to sort its way out. The 2-day chart was in a confirmed down move and now crossed over. And again, I need to adjust that arrow. And again, this is how easy it is on freestockcharts.com and TC2000, the paid service, which we have a discount available for you. If you look in the show notes, $25 off if you wish to subscribe to what I think is the best charting service in the world, bar none. I really, really like it. But let's look at what's going on the 2-day chart. It has crossed over, going up, not super strong as far as the price percent oscillator goes. Derivative oscillator gaining upward momentum. First day of this latest 2-day candle is up, so we'll see just how bonds sort themselves out. We look at the 4-hour chart. What do we see there? 4-hour chart up in the morning, then down in the afternoon. We'll have to wait for some kind of pullback on the 4-hour chart if we're going to be jumping into any kind of up move for a trigger. So we'll just continue to monitor things. Prices above both the weekly and the 2-day. So we'll see how things sort out and if indeed bonds are going to give us an opportunity to jump in. Hopefully, we will have one in the very near future. Hopefully, we'll get a good bit of separation on that weekly chart. We, of course, like to see a much stronger weekly chart for any type of up trade, if indeed that is where things are going. Now, lastly, we go to gold. Of course, we've had a weekly vertical crossover in gold all the way back on the 29th of March. And it was down. It's been down over the last 5 weeks, been down 4 of those quite nicely. We see so far for this week, we still have a green doji forming there on the weekly chart. Price percent oscillator still going down, derivative oscillator negative, but losing downward momentum. Price is above both the 2-day and the weekly, had been below on the prior week on that weekly, and then, of course, popped over this week. Price ended the day, let's see here, at 120.91. So again, Gold sort of bouncing off that 119 something mark. We're going to go from the weekly to the 2-day. And of course, what we see there going into the first day of this latest 2-day candle, we can see has pushed through quite strongly. The weekly trend line, and of course started, Friday off pushing through, Tuesday off, Monday and Tuesday, pushing through the beginning of the week, pushing through that 2-day trend line. So gold, again, is tracking as far as our Heikin-Ashi candlesticks up. Hasn't crossed over on the 2-day chart, but we do see that the derivative oscillator has gone positive. And we go from the 2-day to the 4-hour. What do we see there? Well, we see sort of a pullback. It was trying to get up in the morning and then lost that momentum in the afternoon. Derivative oscillator and the price percent oscillator still positive, but are about flat on the PPO. Derivative oscillator losing energy in the afternoon. And again, pushing through right there on the weekly trend line. So we'll continue to keep our eye on gold, see where it is. Of course, we still have our 2-day and our weekly and confirmed down moves. So we'll see how this 4-hour chart sorts itself out and how much more down movement we're going to be able to get out of gold. Will it punch through that 119.50 mark or so? Is it going to get back down to it and push through it? It's tapped on it a couple of times. We'll see how that moves along. Again, folks, if you've not purchased our book, we got them available for you. Would love for you to have one. We can put one in your hands. 9th printing is available. Follow the link in the show notes. Purchase the book. If you're overseas, we will send you an invoice from PayPal. I am traveling today and will be home and continuing to get those invoices out to our international friends. We so appreciate your desire to have our book, and we'll get it out to you. Email us, cw@chartingwealth.com. We'll send you an invoice from PayPal. I'm afraid you can't use our online Square service. For some reason, it won't clear international credit cards, but we'll handle it another way for you. Again, write us cw@chartingwealth.com. Everybody in the States, just follow that link in the show notes. If you're interested in being a Patreon supporter, we have a spot for you, still several spots in all categories available, and we would like to have you join us on things like we had today, a great Q&A with many of our Patreon members, and we so appreciate your support. Patreon members of all levels, please go ahead and do email us the stocks and ETFs that you would like us to review for you. We'll go ahead and get the recording done and get it out to you in the next few days. Again, that's Patreon members, just another little special bonus they all get. And folks, thanks again so much for being with us. Look at the special training we have in the show notes if you've not already gotten it. If you're a subscriber, it'll be there. If you're not a subscriber, go to chartingwealth.com, sign up for free. You'll receive our daily reviews, our weekly review once a week. You'll see in the show notes PDFs for things like our free traders worksheet, our daily market and weekly market worksheets, links to all sorts of great stuff, including a training about stepping back from the market once a week, looking at a bigger chart, making sure you don't forget what's really going on. I want you guys to hear and or watch that special training. You will get a lot out of it. It is in the show notes. For subscribers, chartingwealth.com. Folks, we love you. God bless. All the best from the whole team here at Charting Wealth World Headquarters.